China just extracted $500 billion from America's fiscal foundation. I'm not talking about the stock market or trade deals. I'm discussing something far more dangerous. China has systematically reduced its holdings of U.S. Treasury securities by over $600 billion from its peak of $132 trillion in November 2013 to just $688.7 billion in October 2025. These are the instruments that keep this nation's spending machine running. This happened quietly, methodically, across months and years, and most Americans remain completely unaware it even happened. Welcome to the Dollar Watch. I've spent a lot of time analyzing these economic shifts, and I need to be honest with you today. What I'm about to explain is bigger than any political headline you've seen this month. It transcends any tweet, any rally, or any cable news debate. This is about the fundamental architecture of American power and the cracks that are now visible for anyone willing to look. If you stay with me through this analysis, you will understand something that perhaps 1 in 100 people truly grasps: why the next decade is going to feel vastly different from the last 5. So what actually happened here? Let me give you the simple version first, and then we'll go deep. China used to be the largest foreign holder of U.S. Treasury securities. At its peak, China held more than $132 trillion in American debt. To put that in perspective, that is more money than the entire annual economic output of nations like Mexico or Indonesia. Today, China holds less than $689 billion. They have fallen to third place among foreign holders, behind Japan and the United Kingdom. That means China has deleted over $630 billion from America's debt infrastructure. More than $500 billion that used to finance U.S. government operations, military spending, and deficits is simply gone. When I talk about Treasury bonds, I want to make sure you understand what we are really talking about. These aren't just abstract financial papers. They are essentially credit card bills for the U.S. government. When America spends more than it collects in taxes, which it has done every single year for over 4 decades, it covers the deficit by issuing these bonds. Foreign nations buy them. And for a long time, China was the biggest buyer of all. Think of it like a credit limit. But instead of a bank giving you a loan, foreign governments lend you money by buying your debt. And just like a credit card, there is an assumption built into the system that someone will always be willing to lend. But what happens when your biggest lender says, "Actually, I'm not interested anymore"? That is the reality we are now facing. And here is what makes this so critical. China didn't panic sell. The data from the U.S. Treasury Department shows a clear, steady pattern. China has reduced its holdings in 7 out of the first 10 months of 2025 alone. Year after year, month after month, Beijing has been methodically reducing its exposure to American debt. This was strategic, it was calculated, and it sends a message that capitals around the world are receiving loud and clear. To truly understand why this matters to your wallet, we need to rewind about 50 years and look at how this system was built. In 1971, President Richard Nixon made a decision that changed how the global economy works forever. He took the United States off the gold standard. Before that moment, dollars were backed by actual gold. If you held dollars, you could theoretically trade them for a fixed amount of gold held by the U.S. government. This created discipline. The government couldn't just print unlimited money because it had to have the gold to back it up. Nixon ended that system. What replaced it is something economists have debated ever since. Here is how it works now, and I want you to really absorb this because it explains everything about American economic power. After the gold standard ended, the dollar didn't collapse. Instead, it became the global reserve currency. This means that countries around the world hold dollars as their primary savings. They use dollars to trade with each other. They price oil in dollars. They settle international debts in dollars. Why? Because the U.S. had the biggest, most stable economy, and the U.S. military protected global trade routes. Everyone agreed to trust the dollar. Being the world's reserve currency gives the United States a superpower. Some economists call it an exorbitant privilege. I think that is an understatement. The United States can create dollars, literally print them into existence, and the rest of the world will accept those dollars as payment for real goods. Every country needs dollars to do business. They need dollars to buy oil. They need dollars for emergency savings. So the demand for dollars is built into the global system. This allows the United States to do something no other country can do: spend vastly more than it earns without facing immediate consequences. Look at the numbers. The United States makes up less than 5% of the world's population. Yet, it consumes close to 25% of the world's resources. How is that mathematically possible? The answer is the dollar system. America runs massive trade deficits year after year. It buys far more from the world than it sells. Normally, that would bankrupt a country. If you spent more than you earned every month, eventually the bank would cut you off. But the United States has been running trade deficits for over 40 years, and the consequences never arrived. Why? Because other countries kept buying American debt, and the biggest lender of all was China. Here is how the cycle worked. American consumers bought Chinese products: electronics, clothes, furniture. Those dollars flowed to China. The Chinese government then took those dollars and invested them back into U.S. Treasury bonds. The money made a full circle. Americans got cheap goods, and China funded the American debt. Some people called this a win-win. America got cheap stuff and cheap loans. China got access to the richest consumers in the world. But that description ignores something critical: power. By holding over $1 trillion in American debt, China was trapped in the U.S. financial system. If the U.S. decided to freeze those assets or use sanctions, China would be vulnerable. For years, that seemed like a theoretical problem, until it wasn't. In February 2022, Russia sent forces into Ukraine. Within days, the Western response was unprecedented. The United States and its allies froze approximately $300 billion in Russian central bank reserves. Let me repeat that number so it sinks in. $300 billion. Money that Russia had saved over years, sitting in what they thought were safe international accounts, was suddenly locked. Whatever you think about Russia or the war, step back and look at what this moment told the rest of the world. It proved that dollar-denominated assets can be weaponized. It showed that if you hold your national savings in dollars or U.S. Treasury bonds, those savings exist only by the permission of Washington. Cross a line, and that wealth can disappear overnight. Now, put yourself in Beijing's shoes. You are holding hundreds of billions in U.S. Treasuries. You see the U.S. designating you as their top strategic rival. The Pentagon calls China its top threat. Trade restrictions are tightening. There is constant talk about war over Taiwan, and the whole time, you are sitting on a pile of money that this same government could freeze with a single signature. What would you do? You would get out? You would diversify. And that is exactly what China has been doing. But most people miss the second part of this story. China didn't just start selling bonds. It built an entirely parallel financial system. First, there is CEPS, the Cross-Border Interbank Payment System. This is China's alternative to SWIFT. If you don't know what SWIFT is, it's the messaging network banks use to move money. The US controls SWIFT and has used it to cut off countries like Iran and Russia. With CEPS, China created a backup, a way to move money without Washington watching. As of January 2025, CEPS links 4,800 banks in 185 countries. Second, China is pushing the yuan for trade. It is reportedly already used in about 50% of trade between BRICS nations. They are setting up currency swap deals and opening clearing centers globally. Third, and most importantly, China is buying gold. In November 2025, Beijing marked its 13th consecutive month of buying gold, with reserves rising to 74.12 million troy ounces, valued at over $310 billion. Why gold? Because gold has a property that Treasury bonds do not. It cannot be frozen. It cannot be sanctioned. It cannot be printed. It is the ultimate hedge against American financial power. When we see China selling bonds, we are watching a country deliberately extracting itself from American control. And China isn't alone. Saudi Arabia, the country that created the petrodollar by agreeing to price oil in dollars back in the 70s, is now openly discussing trading in yuan. Central banks globally are buying gold at levels we haven't seen in decades. Between 2020 and 2024, BRICS nations bought more than 50% of the world's available gold. According to the IMF, the dollar's share of global reserves has dropped from over 70% 2 decades ago to 59% as of 2024. That is a slow bleed, but a clear trend. So, what does this mean for the United States? Right now, the US government runs massive deficits. Interest payments on the national debt alone exceed $600 billion a year. That number keeps growing. If traditional buyers like China and Japan step back, someone else has to buy that debt. Who steps in? The Federal Reserve. When the Fed buys government debt, the technical term is debt monetization. In plain English, it means printing money. We saw this during the pandemic. The Fed printed trillions, and we got the worst inflation in 40 years. Prices for food, gas, and rent skyrocketed. If foreign buyers leave, the Fed has to print more to keep the system floating. That means more inflation for you. It means your savings buy less every single year. This isn't just about numbers, it's about power. The dollar system funds the US military in 80 countries. It allows for sanctions. It allows the US to run a deficit larger than most economies. If the dollar weakens, American power becomes fragile. For you watching this, the effects are real. If the dollar loses value, everything you import, your phone, your car, your clothes, gets more expensive. If interest rates stay high to attract lenders, mortgages become unaffordable. If inflation sticks around, retirement becomes a nightmare. I see 4 paths forward from here. First is managed decline, where the US accepts a multipolar world and shares power. Unlikely. Second is confrontation, where the US uses tariffs and sanctions to force people to use the dollar, something President Trump has already threatened. This is dangerous. Third is crisis, where the system breaks, rates spike, and we have a hard landing. Fourth, and most likely, is fragmentation. The world splits into 2 zones, a dollar zone and a yuan gold zone. None of these outcomes are certain, but the assumptions of the last 50 years, that the dollar is king and America can spend whatever it wants, are dead. Here are the 3 things you need to take away from this video. Number 1. China has dumped over $630 billion in US debt, signaling a strategic exit. Number 2. The freezing of Russian assets killed the trust in the dollar, pushing nations toward gold. Number 3. The US is trapped in a math problem. Without foreign buyers, we have to print money, which means inflation is here to stay. This is a structural shift that will reshape global economics for decades. I want to hear your perspective on this. Where do you think this leads? Are we witnessing the end of an era? Drop your thoughts in the comments. I read them, and they often help sharpen my own analysis. If this breakdown helped you see something you hadn't considered before, subscribe to the Dollar Watch. I'm committed to explaining these complex issues without the jargon. Thanks for watching, and I'll see you in the next one.